Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, July 1st, 2011. This morning I'm talking about, are we in a soft patch? And, I just wanted to say that, the markets over the last 4 days after we've had this Greece thing going on have been on quite a tear. Risk appetite has picked up. All right, stock markets have been higher. They had the largest 4-day rally since before QE2 began last September. So it's really been a good market for a risk-on environment. Oil's pulled back a little bit. It's come back up to around 94, 95 level. All right, we still have, the release of the strategic reserve here. They're trying to control prices, keep them low by using that. I've already discussed the merits and the problems with that type of behavior. But regardless, it looks like we're hitting this soft patch. But things, aren't as horrible as they may seem. Yesterday in the U.S., we got a decent Chicago Purchasing Manager Index. The number came in better than expected, and that's a good sign for economic activity. Now, today we've got a lot of different PMI figures coming from around the globe, and they've all sort of, come down a little bit, and they've come in lower than expected, which, shows you that we're sort of slowing down a little bit. But, if you think about it, you kind of have to have, these expansions and contractions, and that's just the way that the global economy works. We used to talk about economic cycles, as in, you go through this cycle where, sometimes things are very good and sometimes they're bad. Well, the way the governments and central banks have sort of distorted this process, it's the kind of thing where now they're trying to take these economic cycles and turn them into like a nice upward trend line. All right, we know that doesn't happen. So, we're going to experience, weakness here and there, and that's okay because it helps people, redefine what they're looking to do, and, hopefully it allows for more sustainable growth going forward. So, just looking here real quick, we're looking at the picture of the pound dollar here on the 15-minute chart. Yesterday, I identified that 161 as an area of resistance, and sure enough, that thing held, put in a nice double top here on the 15, and it looks like we could possibly go lower. Now, in the UK, their PMI figures came in lower than expected. 51.3 versus 50, what were they expecting? Versus 52.3. All right, so a little bit lower. And, they are slowing down in the UK. We've seen that the home prices have pulled back a little bit there, and the Bank of England's hoping that they get some relief with inflation. So we're going to see that. We've got the austerity in the UK we know about. B of E doesn't seem prepared to do anything about rates anytime soon, so we could see some pound weakness. All right. I also want to take a look at the euro. Okay, euro is just pulling back from this 145 level right here. All right, we got up as high as 145.5, and now we're pulling back a little bit lower. And the euro PMI also came in a little bit lower than expected. We had German PMI 54.6 versus 54.9. France 52.5 versus 50. Oh, well, it came in as expected at France. Italy 49.9 versus 50.6. So you can see that these are all just sort of falling back a little bit, and we're sort of hitting this soft patch in the global economy. So after 4 big days of buying and dollar weakness, we're starting to see a little bit of dollar strength. And here's an interesting chart I want to show you. Yesterday, dollar Swissy, and then we can even look at, I think it was Euro Swissy here. Let's see. Yeah, Euro Swissy. You can see these moves right here that happened. All right, just as the markets were opening in the morning. All right, we'll go back and we'll look at dollar Swissy. There was a rumor floating around that perhaps the Swiss National Bank, the SNB, was intervening in the currency because of its recent strength. That has neither been confirmed nor denied. Okay, but what we do know is that there was a pretty big spike that happened here. This went for over 100 pips thereabouts, and it was one of these things where the Swiss have been known to intervene in the currency in the past. It hasn't really worked in their favor, but sometimes you got to do it to slow down the rate of your currency growth, because what's happening is their exports are getting hurt. All right, they have very low interest rates right now. They're starting to see inflation. They want to raise interest interest rates, but if they start doing it from these levels, it's going to be hard to get the currency to come down a little bit. So, it's not out of the realm of possibility that we are going to see intervention, and it's not out of the realm that this was an intervention. Just we haven't gotten anything specific about it as of right now. We're also seeing we've got a little bit of mixed going on here in Japan, and I'll just tell you, if we look at dollar yen here, you can see we're still in this 81 to 80 range, and it looks like the range is just sort of tightening up a little bit. Okay, here was that same move yesterday morning, and basically what's happened overnight in Japan is that household spending came in a little bit worse than expected, but the jobless rate that came in a little bit better than expected. All right, so 4.5% jobless. They're expecting 4.8%. Consumer prices came in a little bit higher than expected. All right, 0.6 versus 0.5 ex food and energy. And then they also had their manufacturing index came in, and it came in a little bit lower than expected. But you got to remember that they had the supply chain disruptions and things like that. So it's been a challenge for them to get back on track. But they appear to be doing all right. But what we're seeing right here is that we actually have a little bit of Aussie weakness, and we've got a little bit more of Kiwi weakness. And what's happened is that China reported their PMI figures, okay, and those came in lowest levels in 28 months, 50.9 versus 51.5. So it's like a 2-year low, and that just kind of shows you this whole global slowdown that's going on as we hit this sort of soft patch. Now, are we going to be able to get out of this at the end of the day? Well, sure. Okay, there's a lot of good signs in the economy, but people have got to start getting realistic about what we need to do here. And it's the kind of thing where if we can get the politics out of the way of the economics, then we've got some hope here that things can get better. I mean, they're talking about increased spending here in the U.S. and raising taxes to afford that. Well, listen, I don't think millionaires should get tax breaks, but I'm not a millionaire, and my taxes are potentially going up. I live here in New York City, where it's pretty expensive to live. If I made my salary, but I lived in the middle of the country, then yeah, I'd probably be considered wealthy. But here in New York, I pay state tax, I pay city tax, I pay federal tax. If my taxes are going up, I can barely make ends meet here, all right? And I'm not a millionaire, so this this whole thing about we want to raise taxes on corporate jet owners and all this other stuff, a lot of politics going on right now, class envy, class warfare, not conducive to helping the economy, because at the end of the day, people are going to say, you know what, let's just hold back and do nothing. I make enough money. I don't have to expand my business right now if the climate looks unfavorable. I don't have to hire people if the climate looks unfavorable. You know what, I'm just content to sit here and make my money. Perhaps the next election cycle, things will change, will be more conducive, and then I'll start afresh there and look to expand. Well, guess what, next election cycle's over a year away. Meanwhile, we've got over 9% unemployment still going on. All right, and actually, usually non-farm payrolls numbers, usually the first Friday every month, but because we have the 4th of July holiday going on Monday, they've actually kicked it to next Friday. So next Friday is going to be reported the non-farm payrolls report. And I also want to let you know that I'm going to be off on Monday as well for July 4th holiday. For those of you not here in the States, that's basically U.S. Independence Day. It's our national holiday, so markets will be closed then as well. But obviously Forex is always open, so you'll see some trading happening perhaps in Europe and the Asian session, although U.S. session will be much lighter than normal. So, that's really what we've got going on right now. It's just a little bit of a slowdown. All right, markets moved a lot higher, obviously, this week. So, just a brief pause. All right, you're going into a long weekend. Sometimes people like to take risk off ahead of that. So, just maybe some mild pullbacks today. But for right now, things look like that stocks, people want to invest in stocks because that's the only game in town right now, and the correlations that go along with it, weak dollars when you see stocks, that appears to still be intact. If we can get through this U.S. debt ceiling debate and get something solved there, then perhaps we're going to be able to move forward. So, just probably a light day today. I'm sure people are leaving early. Maybe a little bit of a sell-off here and some profit taking at the week's end. And yesterday was also the end of the second quarter, so probably a little bit of window dressing going on yesterday as well. So that's what I've got for today, folks. Happy July 4th and good trading and weekend to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.